Now, this morning, we posted on our website the quarterly, the 10Q that's required to be filed with the SEC. We published it at 7 o'clock Central Time. And we also published an accompanying press release. And if we'll put slide 1 up. These figures, as usual, require some explanation. As we've mentioned in the annual report, the new GAAP rules, generally accepted accounting principles, require that we mark our securities to market and then report any unrealized gains in our earnings. And you can see, I've warned you about the distortions from this sort of thing. And the first quarter of 2019 actually was much like the first quarter of 2018. And I hope very much that newspapers do not read headlines saying that we made $21.6 billion in the first quarter of this year against the loss of last year. The bottom line figures are going to be totally capricious. And what I worry about is that not everybody studied accounting in school, or they can be very smart people, but that doesn't mean that they've spent any real time on accounting. And I really regard these bottom line figures, particularly if they're emphasized in the press, as potentially being harmful to our shareholders and really not being helpful. So I encourage you now, and I encourage all the press that's here, focus on what we call our operating earnings, which were up a bit, and forget about the capital gains or losses in any given period. Now, they're enormously important over time. We've had substantial capital gains in the future. We have substantial unrealized capital gains at the present time. We expect to have more capital gains in the future. They are an important part of Berkshire, but they have absolutely no predictive value or analytical value on a quarterly basis or an annual basis. And I just hope that nobody gets misled in some quarter when stocks are down and people say Berkshire loses money or something of the sort. It's really a shame that the rules got changed in that way, but we will report. But we will also explain, and we will do our best to have the press understand the importance of focusing on operating earnings, and that we do not attract shareholders who think that there's some enormous gain because in the first quarter the stock market was up. And there's one other footnote to these figures that I should point out. It's already been picked up by the wires from our 7 o'clock filing. We report on Kraft Heinz, of which we own about 27% or so. We report on what they call the equity method. Now, most stocks, when you get dividends, that goes into our earnings account, and their undistributed earnings don't affect us. They affect us in a real way, but they don't affect us in an accounting way. We are part of a control group at Kraft Heinz, so instead of reporting dividends, we report what they call equity earnings. Kraft Heinz has not filed their 10K for the 2018 year with the SEC, and therefore they have not released the first quarter of 2019 earnings. Now, normally we would include our percentage share of those earnings, and we've done that every quarter up till this quarter. But because we do not have those figures, we've not included anything. We received 40 cents times $130 million of dividends in the first quarter from our shares, but that reduces our carrying basis, and it is not reflected in the earnings. So That's an unusual item which we have mentioned, specifically pointed out in our press release as well as included in our own. But there is nothing in here, plus or minus, for Kraft Heinz earnings this year, whereas there was last year. And when we have the figures, obviously, we will report them.